So you're dreaming of becoming an owner-operator in Canada, but that massive down payment feels like a roadblock, right? Well, you've come to the right place. In this explainer, we're going to lay out a clear, step-by-step guide to getting the keys to your very own semi-truck, even if you have zero money to put down. Let's get into it. And this quote right here, it really just nails it. This whole thing isn't just about driving a truck. It's about building your own future, Getting that independence and really taking charge of your financial destiny. This is the why behind it all. All right, to get you there, we've put together a simple roadmap. We'll start with the dream itself, then we'll tackle that no money down hurdle. After that, we'll dive into 3 different ways to get financing, build your playbook for getting approved, and wrap up with how to be a smart owner once you've got the keys.
Okay, first things first, let's talk about what's really pushing you. Making that leap from being a company driver to an owner-operator, that's a huge move. You're basically shifting from just earning a paycheck to running your own business.
Look, at the end of the day, it's really about being an entrepreneur. It's about building something that is 100% yours, calling your own shots, and creating a much more secure future for yourself. But before you can do all that, there's a pretty big hurdle you've got to clear. And that brings us to the single biggest challenge for almost everyone trying to do this: the upfront cash. I mean, this is the exact spot where so many good drivers just hit a wall and start thinking their dream is totally out of reach. So how do you get past needing that huge down payment? It can seriously feel like an impossible barrier. But here's the good news. It absolutely does not have to be a deal breaker. There are ways to get this done without having a giant pile of cash ready to go. So let's get practical. We're going to break down the 3 main ways you can finance a truck without needing that big down payment to get started.
First up, we've got the lease-to-own program. The easiest way to think about this is like rent-to-own, but for a semi-truck. You make your regular lease payments, and then at the very end of the contract, you get the option to buy the truck.
Okay, let's look at the trade-offs. The biggest pro, for sure, is you don't need that big down payment, and you can get on the road almost immediately. Sometimes, maintenance might even be covered. But you got to watch out for the cons. It will almost always cost you more in the long run, and you don't actually own anything until the lease is paid off. Plus, trying to get out of the deal early, that can come with some really painful penalties.
The second path is a loan that covers 100% of the truck's price. This is what we mean by true no money down financing. And unlike a lease, the second you sign those papers, that truck is yours. You are the owner from day one.
So here's the breakdown on that. The pro is a big one. You get full ownership right away. But on the flip side, you're probably looking at higher monthly payments, and the lenders are going to have much stricter requirements to qualify. And yeah, probably higher interest rates too, because they're taking on more risk. Now, it's also really important to know that not all leases are the same. You're usually going to run into 2 main types. An operating lease is basically just a long-term rental. The leasing company owns the truck the whole time. But a finance lease, that's a whole different animal. It's much more like a loan, and most of the time, ownership of the truck transfers to you at the end. And trust me, this difference is huge when tax time rolls around.
Okay, so you know what the options are. Now, how do you actually get a lender to look at your application and say yes? Let's build your playbook for getting that approval.
It really boils down to these 3 things. You need a strong credit score, you need to show proof of a stable income so they know you can make the payments, and you absolutely need a solid business plan that proves you've really thought this whole thing through. And here's an insider tip. Lenders look at more than just the numbers. Of course, they're going to look at what they call hard information, your credit score, your revenue, your assets. But they also look at the soft information, and this is where you can really shine. This is the story of your business, your years of experience, your management skills, and a detailed business plan with realistic projections. This is what shows them you're a safe bet, not just a number on a spreadsheet. All right, here's some real-world advice straight from a broker who does this every day. First, shop around. Don't just go to your local bank. Find lenders who specialize in the trucking industry. Second, don't get discouraged if your credit isn't perfect. Really good, organized paperwork can make all the difference. Third, if you have your ducks in a row, you could get approved in just 2 or 3 days. And finally, don't forget that you can finance used trucks and even private sales, not just brand new rigs from a dealership. And hey, if you're feeling a little intimidated by all this, just look at this number. Some financing specialists approve 91% of the applications they get. This isn't some impossible lottery ticket. With the right prep, getting approved is totally doable. So, you did it. You got approved. You've got the keys to your truck. Awesome. But the journey is not over. The next step is all about running a profitable business. See, making that monthly payment is just one piece of the puzzle. You have to be smart and find ways to offset your costs. And the best way to do that is by taking advantage of every single tax deduction you're entitled to as a business owner.
Okay, the biggest one you need to know is the Capital Cost Allowance, or CCA. Don't let the name scare you. It's pretty simple. Your truck is a massive business asset, and it loses value over time, right? Well, the CCA lets you deduct a piece of that value from your taxable income every year, which means you pay less in taxes. Simple as that. Just look at this quick example. In your first year, claiming an $8,000 CCA deduction could literally save you $2,000 in taxes. Do that over a few years, and we're talking about thousands and thousands of dollars that stay in your pocket, all just for owning your truck.
Now here's another super important financial difference between leasing and buying. If you have a lease, your entire monthly payment is usually deductible as a business expense. But if you have a loan, you can only deduct the interest part of your payment. This can make a huge difference to your final tax bill, and it's a really key thing to think about when you're choosing how to finance.
And of course, there are plenty of other key deductions you need to know about. As an owner-operator, you can deduct so many of your major costs. We're talking fuel, maintenance, repairs, insurance, licensing fees, even your meals and lodging on the road as long as you follow the rules. You've got to track this stuff carefully because it's essential for maximizing your profit. So there you have it. We've walked through the dream, the big hurdle, the ways to get financing, the playbook for getting approved, and the keys to being a smart owner. The roadmap is laid out for you. The only question left is, are you ready to get behind the wheel and drive your own business forward?